Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Okay, where is the chat? Hello, everybody who is joining. I'm completely unable to see who's actually joining right now. So if you are joining this video, okay, we have 17 viewers right now. Drop it in the comment section down below because I can't see your names. Introduce yourselves, where are you from, and let's get ready to trade some smart money concepts during the New York session. And whilst we are essentially waiting for that, I will also be taking you guys through some of our premium content, essentially. So go ahead, drop. Okay, Moses, hello from South Africa. Hello, Moses. Just a quick kind of introduction to you guys. I am Lewis Kelly. I am the founder of Prosperity Academy. If any of you guys have heard of that company, that education program, we are the fastest growing smart money concepts education program and brand as a whole, to be honest. Fastest growing in the entire industry right now. Okay, who do we have? Good morning, says Hugo. Good morning, brother. New Jersey. Rochelle from Texas, Cuba, Texas, India. Damn, we got a lot of people here from a lot of different places. India again. Belgium, Europe. Okay, nice. Good. Okay, so I'm going to just wait and allow a couple more people to join into the live before I start breaking down some price action and whatnot and just explaining kind of where we are. I'm going to be looking over gold. Of course, there's going to be a lot of Q&A back and forward in here. So the structure that I'm essentially going to go with is I'm going to give you guys a brief interview to what is smart money concepts and what are some of the concepts that we use when we trade smart money concepts. Then I'm going to go and apply some of those concepts onto the charts by showing you a few things. Because you need really the context to understand what it is that I'm doing if you want to understand what it is that I'm doing, right? So I'm going to be sitting here for the next kind of like 3 hours and trading this New York session, but it's not going to make any sense to some of you guys who don't know what it is that I am speaking about. So I just want to give you guys some context overlay, and I do apologize if some of you guys do already know what smart money concepts are. But this is, it's general. So it's for the guys who don't know what smart money concepts are. And then, of course, after I've kind of explained what is smart money concepts, I'm going to go over and show you how to use them. Then I'll take Q&As, and essentially we'll just have a chat. We'll have a vibe. We'll have a good time. And yeah, hopefully you guys will take a lot of value. I will not leave anything on the table. I will give you anything and everything you want. I believe in full giving of value. I mean, this skill set that you guys are all on a journey to learn is a skill set that has been able to provide the ultimate freedom for my life. And I want that for as many other human beings as possible, especially in a time like now that we're living through, which is a whole nother context. But maybe we'll go into some of that stuff. Okay, so we've been live now 5 minutes, I'm going to go ahead and start breaking down essentially what is smart money concepts. So just let me know in the chat, guys. You guys can both see my screen recording and me, right? Just let me know, yes, thumbs up, whatever, just to make sure. I'm pretty certain that you can, but let's just make sure, guys. Yes, awesome, DJ. Okay, Prosperity family. Haha. We have a private chat for you guys. Okay, cool. So, smart money concepts. What is smart money concepts would be a great start off. Now, a lot of people have a huge misconception when it comes to the idea of smart money concepts, and they essentially believe that they are the bank, right? And they know exactly how the banks trade and all of this stuff. And that just couldn't be any further from the truth, to be honest, because, well, the banks don't trade. At least the big banks don't trade, the ones that I'm talking about who actually control this market. So a bit of context is that this entire market and every single market that exists that has money is completely owned and controlled by essentially, well, realistically, the Federal Reserve, right? The ones who actually print the money and then allocate the money to governments and institutions through the sale of bonds and all of that kind of story of how money is created. But those are the ones that control all of the money in the world. Thus, those are the ones that control all of the markets in the world. Because what is a market? A market is simply just the inflow and outflow of money, right, being exchanged. So whoever has the most money has the most say, and the ones who print the money have the most money. Therefore, you can very simply conclude that the ones who control the money control the markets, right? I think everybody would agree with me there. It's perfectly understandable logic. So they have an algorithm, right? And this algorithm essentially just inputs buy and sell orders. But this algorithm is, of course, programmed. If some of you guys don't know essentially what I'm referring to, you can look up something along the lines of Aladdin, right? Aladdin is an algorithm owned by the world's largest institutional hedge fund or capital management or whatever you want to call them. Essentially, they rule the world. This algorithm manages like $10 trillion, right? So that's a lot of money. So this algorithm is pretty much what's deciding where the prices of what assets go, period. So with that out the way, we can kind of get into how essentially I look at the market through smart money. So the thesis and the concept is that smart money leave behind footprints when they make a move. So when smart money inputs, buys or sells, they leave a footprint, right? Which is price action, which is technical analysis, which is what you're looking at right now. And it's your job then as a technical analyst to read that footprint and come to a conclusive understanding and then make a decision based on that. In order to do that, you, of course, first need a way in which you intend to read the footprint of the big players. So I broke it down. Well, it didn't, of course, originate from me. If you guys want to do your research, this sort of stuff originated from a man named Richard Wyckoff, who is kind of like the grandfather of smart money. Richard Wyckoff was a Wall Street trader a long time ago, and he brought out these concepts of, market structure in its fractal nature and supply and demand, and of course, liquidity, which is cause and effect. And then, of course, he had his own schematics of accumulation, distribution, reaccumulation, redistribution, which we call the Wyckoff method. So I use three systems, right? I use market structure, which is obvious, but in a multi-dimensional facet. So what do I mean by market structure is multi-dimensional? Let me show you something. So we have a bunch of different time frames up here in the top left-hand corner, right? The studio is full, 10 people. Please ask someone to leave. Okay, give me 1 second. Because currently, give me 1 second, guys. I want to make sure that my people can also join the live. Trading Nut YouTube. Okay, so we have a bunch of time frames on the top left here. Now, all a time frame is a frame of time that we get to perceive price on. So the 1 hour time frame, of course, represents one candle being 1 hour's worth of price action, and so on and so forth for every different time frame. So then the case isn't that each time frame is different in the sense of what the market is going to do. The case is then that it's a different perspective of what price is going to do. I hope that kind of makes sense to you. Just to kind of recap, it's price is always only doing one thing, but can be perceived many different ways because we're viewing different timeframes. For example, if I go right now to the 5-minute time frame, price action to anyone looking on the 5-minute time frame is going to say, you know, that's bullish, right? But then if I go to the 4-hour time frame and zoom out, then I think we can all agree that price looks bearish, right? And then even further, if we go to the weekly time frame, then I think we can essentially agree that price looks bullish, right? Because if you just mark out this swing high, this swing low, new swing high. So you can see the price is just what price is, but the time frames we use are what we perceive price to be. So that's why I say that market structure is multi-dimensional. Let me show you an example of that. For this, I'm going to go to essentially the line chart, which is not that, that's the curve chart. The line chart, right? The path chart. So let's just pull out this market structure right here. And we're going to put that market structure right there in green, okay? Maybe green's a little bit difficult to see. Let's put that market structure. Okay, let's just put it in blue, right? So essentially, I want you guys to know that the blue here equals 4 hour, right? So this blue equals the 4-hour time frame. So I think you guys now looking at this, if you just know basic market structure, you know, we have a swing low, a swing high, a new swing low, a new swing high, and then expecting some sort of new swing low at some other point. So what's happening is very simple. Our swing points are increasing, which is bullish order flow, right? I call it order flow because I use essentially 2, sometimes 3 different types of structure, which I'm going to elaborate on soon, right? So this is what we call order flow, which is the 4-hour external swing points of market structure. Again, I will go deep into detail about that in a moment. So we can see that we have bullish 4-hour order flow, right? But then let's say we perceive this same piece of price action, but now we perceive it on a 15-minute. So that 15-minute is going to look the 15-minute time frame is literally just going to look like this, right? The black. So now let's say that the black represents the terrible trial of a 5. That's better. The 15-minute, right? So the black represents the 15-minute and the 4-hour represents the blue represents the 4-hour. Okay. So we know then that the order flow, which again is the external swing points of market structure on the 4-hour time frame, is bullish. So that's one perception of market structure. It's order flow, which is the external 4-hour, which we just spoke about. It's bullish, right? Okay, so we have a 4-hour, which is bullish. Then we have a 15-minute. So now what you need to do is establish those same swing points on a 15-minute time frame. And for this, of course, I'm going to use the black highlighter. So let's mark out our swing highs and swing lows of the 15-minute. We're going to take our swing low right here, swing high, swing low. Now we have higher high. So the moment that price makes a higher high, we know now that the price action on the 15-minute is bullish because price just made a higher high. Agreed? Great. Why? Because price had a break. This is obviously a break of structure. Price is put in a new high. So right now, price is bullish. As we put in higher highs, higher lows, higher highs, price is bullish. Again, higher low, higher high, higher low, higher high, lower low. Now, at the minute that we create a new low that is lower than the previous low, this is, of course, a break of structure. At this point, the 15-minute time frame shifts from bullish, making higher highs and higher lows, to bearish, making lower lows and lower highs. So at this point in time, we're perceiving the 15-minute time frame to be bearish. So you can see right now how we have two different time frames and both tell a different story. Now, here's what's key, right? Price then reshifts again. I want to give you guys some context. If the order flow is bullish, meaning if the higher time frame is making higher highs and higher lows, when the internal time frame, the 15 minutes, the internal structure, the trend is what I call it, shifts and has a lower low, that is known as a pullback confirmation. We now know that the 4-hour is now pulling back to put in its higher low, right? Which is this low down here. That then gets once again realigned when the internal 15-minute shifts bullish again. So the moment that the internal then shifts bullish again is our confirmation that the 4-hour is now going to put in a new higher high. Very, very simple stuff. So we follow the 15-minute again. We say higher high, higher low, higher high, higher low, higher high, lower low. So what is that? We just spoke about it, right? It's a confirmation that price is pulling back. So now we are expecting, which is called expectational order flow, we're expecting price to come somewhere above this low and take out this high, because that is the expectational order flow. All we are expecting is bullish price action. So that is how we build essentially a bias, because that's how we predict market structure and know how to read market structure. Again, I will show you this in the live market so you guys understand what it is that I'm really saying. So that's essentially market structure from a multi-dimensional perspective. Now, after market structure is supply and demand, right? Or some of you guys might have heard of it as order blocks. Now, the concept of an order block is pretty simple. It's an area of price where extreme volume comes into the market that is unmitigated. It leaves behind imbalance that shows unmitigation. So what we have right here is this box right here is essentially where volume comes into the market that pushes price down, right? Very simple. This is area of the market where supply orders, sell orders, came into the market. It came in with such an aggression that it actually left behind imbalance. Imbalance or inefficiency, if you guys haven't known already, it's essentially this, the wick of the first, which is here, and the wick of the third, which is here, do not touch. So we have a space in the middle, an empty gap, which is called imbalance. Imbalance, essentially, the rule of imbalance is that price will always fill the imbalance. If you actually just go ahead and look at all previous price action, you will obviously realize that at some point or another, all of that imbalance was filled. So take the example right here, right, where we have this push up and then the extreme momentum comes in. Now we know that the first candle and the third candle don't meet and it leaves a gap, but don't worry, because at some point in the future, that gap gets mitigated and so does our supply zone, right, which is our order block. So that is a very simple way to look at an order block, right? So this right here is essentially an order block. Now, at all times, of course, as we can see right now, demand comes into the 4-hour time frame here. So let's imagine that there is an order block right here. Now, what our job is to expect price to come into this area, this order block, and when price comes into that order block and gives us a what? A realignment. A realignment, as we of course just spoke about, when the internal 15 realigns with the external 4-hour, that is the value, right? That is a point where you're going to take a trade, and that trade is going to be like this. That 15-minute that just had the internal breaker structure is going to leave behind a demand zone. That demand zone is then going to theoretically be filled by the M15, and then you're going to expect price then to go and take out the new swing high. So essentially you place your long position on here with your stop loss just below the low, and then you target the week high, right? And that is essentially, in a very, very, well, not very, very simplified, but in a much simplified fashion, that is the concept that we trade. So now you guys have some context. I'll go ahead and now show you how I'm using that there, the multidimensional nature of market structure combined with supply and demand order blocks, to get involved in the market, or essentially what it is that I'm looking for on gold today. And then we'll go over some other pairs, and then we'll go over some Q&A, right? So I'm going to delete everything. Now, do any of you guys remember? Let's open chat for a second. Hi, Lewis. Will this be on YouTube? Because I have to go. Yeah, Sean, this will be on YouTube, I do believe. Yeah, it will be on YouTube, Sean. If any of you guys have no, we'll save that actually. So step number 1 of what I just shown you guys on the lines, does anybody remember what step number 1 was? Please drop a comment down below right now if you actually remember what step 1 was. No problem if not, but I mean, there should be at least some of you who do know. Private chat. Bias. Of course, it's my lovely prosperity family. Exactly, right? Bias. Higher time frame bias. Identify order flow. Higher time frame bias. Find the bias. Of course, you guys are living legends. Okay, thank you, Rochelle, the first person from the Trading Nut. Higher time frame direction. Thank you. Now, we here at Prosperity Academy determine our higher time frame direction simply by the external swing points of market structure on the 4-hour time frame, as we've just gone over 10 times. So to do that, essentially, you literally just mark up the swing points. How do you determine a swing point? It's just literally the edge of market structure where price reversed from. So with that essentially description of what a swing point is we have a swing point here, and then we have a swing point here, and then we have a swing point here, and then we have a swing point here, and now we're expecting another swing point that is going to be down here, right? Because that is simply put the order flow. So I can show you guys as well how I'm still in the trade open running right now. I'm still in the trade open running right now on gold that I got into in here. I can break that down for you guys. I know you guys at Prosperity have already seen it, but anyone here on the Trading Nut, I can break that down for you guys and explain essentially how I got involved here. But yeah, this is our other swing point, and that's I was able to get involved in that area of the swing and essentially looking at taking out this low down here. The reasoning behind it. So we have a concept called premium and discount here at Prosperity Academy. And the concept of a premium and discount is very simple. We want to sell premium and we want to buy discount. So when we're looking to short the market, when the bias is bearish, we look to sell the premium. How do you determine premium and discount? Simple. Take out a Fibonacci tool, program your Fibonacci tool to be only 0, 1, and 0.5. Then you will be left with a top gray area and a bottom black area, and then a line in the middle, which is 50%. So as you guys probably already clocked on by now, anything in the top 50% is what we call premium. And anything in the bottom 50% is what we call discount. Very, very simple. So how do we know when price is going to go and put in a new swing low? We know because price will retrace back into a level of premium, give us our realignment, which is our confirmation, which you guys seen before, which is our internal structure. That internal structure is essentially our key, really. I'll go deeper into that in a moment. So you simply just wait for price to retrace back into a level of premium, and then you just wait for the lower time frame to realign from a level of supply, or if it's a bullish example, or demand. It's actually very easy. So premium and discount, okay, so you wait for price to pull back into the 50%. When price then pulls back into the 50%, you simply need to see something called a change of character. So I'm going to go ahead right now. Here's the supply zone. Again, you're going to react. We trade only from order blocks. We trade only from levels of supply and demand. That is our entry. First, step one, we build a bias by using the multi-dimensional nature of market structure. Simply put, multiple time frame analysis. Step two, we only take entries and points of interest. So we call them points of interest. A point of interest is a point of interest. It's a point of price where you're interested in getting involved in market. It's very basic stuff. So yeah, our points of interest are always, if we're shorting, in the premium level of the swing. And it's always from a level of supply, which is an order block, which you can see right now. This is an order block. And then you have pretty much the only other unmitigated order block in this entire price leg is this one. And this one. And I mean, arguably, you could maybe get away with this one because it's only fractionally mitigated. The process of mitigation is very simple. It's just that price comes back and price comes back to mitigate the orders from the level of supply. So again, let's go back into a little bit of context. What is mitigation? Well, essentially, when price wants to go in one direction, the algorithm will first move the price in the opposite direction to capture liquidity, which is simply just another word for money. It will capture orders. Why? Because it needs to remove those orders out of the market, because the market only has a certain amount of orders to fulfill its intention, its bias, effortlessly, right? So when it does that, that essentially thesis is that every time it wants to sell, it's first going to buy. And every time that it wants to buy, it's first going to sell. So that buy to sell or the sell to buy is what we call our order block. Why? Okay, very simple. Because when they sell to buy, they never got out of the sell positions. So those sell positions that they opened to then go and buy, which usually what this sell to buy is called liquidity inducement, which is a concept of how they trap, smaller banks and institutions that oftentimes trade retail concepts, like, small market structure and basic things like support and resistance and key levels. And again, not saying you can't be profitable with those things, because you can, but the profitability with those types of things really just comes from how good is your psychology, and how good is your risk management, really. Not saying you can't, but yeah, I just don't like the idea of them. So essentially they will sell to buy first, but with the buys, they run in a loss, right? So when they sell, to buy. These sells right now, the further price gets away, the deeper these sells are in a loss. Now, one thing you have to understand about this algorithm is that it has infinite money. So this algorithm doesn't use stop losses. It doesn't need to. This algorithm is the market. Whenever it needs to take price to a certain area, it will take price to that. So banks can hold drawdowns of billions and billions and billions of dollars because, well, it knows it can just come back and mitigate the orders for break even. So that is essentially what they do. Every time they bring price back to an area where they were losing, and they can hold this drawdown for days, weeks, months, years if they really want to. And the higher the time frame, the higher your perception of them, of the time frame that they're mitigating and issuing their orders. So the thesis is that when they bring price back up to one of those levels, they close the positions at break even. So again, they have sell orders all the way up this price leg. That's the whole point of a pullback, right? Market structure moves like this is because they buy, sell, but whilst they sell, all of these buys now are running in a loss. So then they bring price back up, buy, to mitigate, continue, sell. And now they have these buys. Mitigate, right? And so that's why that almost all the time price will react from a level of an order block, right? A level of supply or a level of demand. And again, just because price reacts to an order block does not mean that order block is going to take out a swing high or take out a swing low. It simply just means that there were orders in that level that needed to be mitigated. So that's why we use the multiple time frame analysis or the multiple dimensional analysis, is because that's the real key. Because you need to know in what direction the market is moving. For example, you guys can very clearly see right now that a large momentum came in here and we left behind a level of demand, which is an order block. Okay, great. Now you can trade this level, and some of the guys at Prosperity Academy did trade this level, and it makes sense. The only reason that you can trade this level is because price gave the internal reaction that told us that price was pulling back. But trading out of this level and expecting swing highs to be taken out or random levels to be taken out that have no thesis, even really expecting these highs to be taken out, it just doesn't make any logical sense. I mean, it absolutely can, because price could just come and then mitigate new levels. You never know exactly where price is going to go and put in a new lower low from, because you're not the bank. So anyone who tells you that they 100% know what the market is doing is lying. You essentially just have a plan, a way of interpreting price action that tells you what it's doing based on your perception. And then, of course, you just have to be right enough times, and right when you're right, have a big enough win, and then you'll make money. It's very simple. We're not trying to be correct all the time. We're just trying to make money. So I think we got sidetracked then. This level of demand, essentially what would have happened was price would have sold to buy. And then price needed to come back to mitigate those orders. When price mitigates those orders, now it can do whatever price wants to do from that level, be it go up or continue to go down. But the point is the point of the matter is that price will pretty much always come back to these levels to mitigate the orders. And then when you have the right ones, that is where price reacts from. Price always reacts from levels of supply and demand, always. I think someone asked me a question about Bitcoin earlier. I won't get sidetracked right now, but Bitcoin's going to 12K, right? And when Bitcoin was 59K, I was calling this on Twitter. You can literally go and check my Twitter. It is Lewis Kelly 888. You can see me literally on Twitter calling Bitcoin 12K when it was like 59K, 57K around December of 2021, November, December of 2021. Because the telltale signs were there, and there's so much imbalance and levels of demand and order blocks that need to be filled down at those $12,000 levels, it was inevitable. People call me crazy, but yeah, here's how I see it, right? 95% of traders lose, 95% of investors lose money. So when most of the people are calling you crazy, well, statistically speaking, that's not necessarily a bad thing, because there is the 95% and then there is the 5%. And the 5% are the ones that make money. So if the 95% disagree with you, then you're probably in the 5%, right? That's kind of just my thesis, at least. So you kind of want as many people as possible to disagree with you, because that just kind of proves that you're right almost all the time, which is a very interesting way to look at life, which is kind of how I look at life as a whole, broad spectrum. Everything. Anyway, I won't get into philosophy. So yeah, you can see that price reaction levels of supply and demand, and then essentially we get in with lower time frame confirmations. So if I just kind of pull price back to here right now, because there's nothing right now happening on gold that's going to allow me to get into a trade. So I might as well just show you this, and then we can go through gold and what I'm expecting right now. But yeah, so we are premium and discount. We're inside premium. Here is a level of supply that is inside premium. What we need to see inside of this is a realignment from the 15-minute. So if we just drop down to the 15-minute. Now, some of you are going to look at this and think like, this is ludicrous, right? It's crazy. But I can show you so many different times that this has happened or does happen. I'll even show you another example in a moment. It's a concept called change of character. We have two characters. One is supply, one is demand. Very easy to understand. Demand is price increasing. Supply is price decreasing. So a change of character simply just means from demanding control to supplying control. Change of character, right? And we call that CH, CHOC, change of character. So when that happens, which happens right here, basically how you identify that is you see price comes in, price puts in a wick, then supply comes in, right? I'm going to go to the 1 minute time frame so you guys can literally see this cleaner. Because on the 15-minute, especially if you're new, you'll probably think I'm crazy. So you can see, right, price taps into our order block. All we're waiting for here is confirmation, by the way. We already know that price is going down. We just don't know where it's coming down from. So when we get confirmed, we already know that the intention of the bank is to take price down, because they've already left behind their footprint. They've already shown us that they're going down. So when price comes in, it puts in a high, which is demand. Then it puts in supply, which is a push down. Then it goes ahead and puts in a new leg of demand, which takes out this one. So now demand is in control from this level right here. The moment that that demand level gets taken out is our change of character. Why? Because it's simple. It's just that demand was in control. Buy orders, buy orders, buy orders. Now now supply is in control, because there are more sell orders than there are buy orders. If there were more buy orders than there were sell orders, then price would go up. But because there's more sell orders than there are buy orders, price is going down. It is so simple. It's just the nature of the market. So with that information, what do you guys see? Do you guys see this order block that's sat right here, that's still unmitigated? That was a buy to sell that liquidated this high right here, a buy to sell. Don't forget, this is an algorithm. So this algorithm isn't designed, there's no one sitting behind the computer screen and going, I'm going to liquidate this person or this hedge fund or this thingy. It's programmed on principles, and it will repeat those principles on every single time frame at all times. So just because this is a 2 minute time frame, do not think that this does not hold just as much relevance as a 4 hour time frame when it comes to the algorithm and the flow of orders itself. What do I mean by that? I mean, if this was on a 4 hour time frame right now, and you've seen this wick the high right here, what are we going to have above here, right? We're going to have, number one, there are going to be stop losses. there are going to be stop losses in this area because prices reacted from here. So people are looking at this as a level of resistance or a level of, resistance. There's going to be stop losses above here. Okay, that's liquidity number one. What else is there going to be? Well, there's going to be buy orders. Why would there be buy orders? Because they're breakout traders. Price has now technically broken a new high. So they're going to be pending buy stops up here for the expecting that price goes up. Where they're going to have their stop losses? Probably down below this low. Don't overlook because it's a 2-minute time frame, you think that it's different to a 4-hour time frame because it's an algorithm. You have to understand that the 1-minute time frame is what makes up the 15-minute time frame. There's 15 1-minute candles go into one 15-minute candle. And then the 15-minute time frame makes up the 4-hour time frame because there are 16 candles that go into that 4-hour time frame from the 15-minute and so on and so forth all the way up. So if it's an algorithm, then it's every microsecond, every now moment, there are buy and sell orders coming in that are already pre-programmed to do what it is they're going to do. And because the lower time frames build the higher time frames, the orders all are programmed in the same nature. I hope you guys are following along because it's very important information that's like very rarely known in the trading space, to be honest. So price liquidates the high. There's going to be stop losses and orders in here. So price liquidates the high. I'm going to get rid of this comment down here because he's trying to spam. So when price liquidates the high and then changes character down here and leaves behind a level of supply, that is our confirmation. And again, if I just go to a 5-minute time frame or even a 15-minute time frame, sorry. So 5-minute, you can see it's unmitigated supply, right? So that is where we are going to take our sell order from. And in reality, there are really just a few options that can happen here. And you have to weigh those options and say, like, is it worth getting involved or not? So the obvious reality, the obvious first reality, right? And you guys are looking at this and thinking 1 to 41, what's he doing with that? Why would you take that low? I'm going to explain all of that in just a moment. So reality number one is obviously that price just takes us out and gives us a stop loss, right? Obviously. Now, there's no accident for that. You have to understand this whole reality that we live in, this whole thing that we think is a reality, that we think is Earth. I'm not going to go into that deep shit. But this whole thing that we live in is bound by rules. And one of those rules is cause and effect. Cause and effect simply states that every outcome happened because of an income. Every output is a result of an input, right? Every input causes an output. This pen right here, dropping on that table, the output was the drop on the table. The input was me dropping the pen. The cause and effect. So everything is cause and effect. Everything has a reaction, right? That is the reality we live in. Now, what you have to understand is those laws apply to everything in life and absolutely markets also. This is the deepest level of trading, the deepest understanding of a financial market you will probably ever come across in your life because it's absolute truth. Because it's based on the laws of the universe. If you guys want to look that sort of stuff up, go and search the 7 principles of the universe. It will give you the 7 laws in which bounds this universe, actual laws. So they're apparent in everything that we look at. So with that being said, there is a reason that price would stop us out, and there is a reason that price would tag us in and go to our profit. The reason that price would stop us out is because price didn't want to come back from this level, because price could come up to this level right here, or this one, or this one. But from every one of those levels, we want to wait and see the same thing, right? That same thing is the realignment, the change of character, the shift from demand to supply. That's all we ever look for in these points of interest. So that's exactly what we'd be looking for if it just took us out and came into this one. But we have to trade every single one that it does that, because that is our system. So let's go back to the 15-minute time frame. That is where we want to get into the trade. Where do we want to get out of the trade? Well, we actually want to get out of the trade at the swing low down here. Why? Because that's the order flow, right? Rochelle said it. We're looking for a higher time frame direction. So if we're expecting that the higher time frame direction is bearish, then what are we expecting, right? We're expecting a new lower low from anywhere from this high to this 50%, anywhere inside of here. We're expecting that price puts in a final swing point and goes and puts in a new lower low. Whether it be this one, whether it be this one, whether it be this one, or even this one, does not matter. We just have to trade the reaction to each and every one of them. And that is the thesis that we use, right? So when price does that, our entry's there, and our take profit, our real take profit, other than like management and taking partials and all of that stuff, our real take profit and our end goal and the overall purpose of this trade is to go and take out the swing low, because the order flow is bearish and we are trading based up on the order flow. So just before I kind of show you guys the output, is everybody following along? Does everybody understand what it is that I am trying to explain to you right now? Please let me know in the comment section down below. Just go back to the 15-minute time frame so I can show you guys essentially what happens. Yes, perfect. Amazing. Great. So that is where we want to get into the market. Now, why would we put our stop loss so tight, or why would we not put it up here? Because the purpose is that if this is the level that price is going to reverse from, it's going to be from this level of supply, because we're trading the laws of supply and demand. We're trading the laws of supply and demand. So in reality, by putting our stop loss up here and thinking that price could just do this would make no sense, because then we would take out our level of supply, and then demand, the minute that price takes out this level, demand is back in control. So when demand's in control, we're not looking to short the market, because there's more buy orders than there are sell orders. There was a change of character going up. Why stay bearish? Let me break it down to you. Show this comment. Can everybody see that? There was a change of character going up. Why stay bearish? Of course, changes of character appear everywhere, left, right, and center. The point is that we trade order flow. What we're really interested in is the external swing points of price action. So all we actually care about is this 4-hour order flow right here, right? This high puts in this low, and we're expecting a new lower low from anywhere above the 50%. So we only care about changes of character when we enter a point of interest that could produce a reversal. That's why. So we just put our stop loss back in place here. I want to kind of go closer into price action so you guys can see it firsthand, because I want to explain some things. And I want to make it clean and tidy because I'm an organized person. Display price. Okay, price moves away. What do we create right there? Again, guys, algorithm doesn't matter. 1 minute time frame, 10-second time frame, 5-hour time frame, daily time frame, weekly time frame. What do we have right here just before our entry? Equal highs or resistance. What is that? Liquidity. Why? Because at levels of equal highs or at levels of resistance, people have money there in the form of stop losses, because they're expecting price to go down, and they put their stop losses above the equal highs or the resistance, because if it goes above it, it invalidates their trade idea. Or second, they put buy orders in there, because if price breaks through a double top or breaks through a level of resistance, then price is going to go up, right? So that's liquidity, which is amazing. One of our biggest concepts is liquidity. So we build some liquidity, and then price starts to move away. Now, a lot of traders looking at this right now are like, oh my God, we broke this low. Like, let me FOMO in, right? And they want to get involved in somewhere along that line, which makes no sense, because the level of supply that actually initiated this original change of character hasn't been mitigated yet. So a lot of early sellers are about to get rinsed, right? Which is another form of liquidity. Early sellers, when price starts coming down, they start selling and thinking that this high is being respected because it broke this low. So now we have a lot of liquidity. And again, guys, this is the attention to detail. This is the attention to detail that goes into trading this style of trading. It's not just, hey guys, here is a key level of 1720. Or hey guys, here is a piece of price where price tapped in one time, tapped in another time, and we think because of that, it's going to tap in a third time and melt with no context. This is true artwork. This is real understanding of the nature of a market and the orders that come into it. So this is art. That's how I see it. I'm an artist. So we can see prices essentially moving away. Again, at this point, amazing because we have loads of liquidity in here. So I'm sitting there thinking, amazing. If they're building liquidity in an area like this, that's great because there are probably a lot of sell orders coming in right now. So the algorithm is designed to do what? When there are lots of sell orders, the algorithm, because here's how it goes, right? This sell orders could be from a million different people. There could be a million different people selling in this area. But the only one that actually controls the market is the Federal Reserve because they have all the money. So it doesn't matter if there's a million different traders selling $1 million at one time. 1 million times a million? No, that's quite a lot, actually. That's a trillion. It doesn't matter if there are a million traders all selling thousands and thousands of dollars worth of positions at one time. The algorithm, which controls the market, if that wants to take out that liquidity, which it's going to, why? Because if there are millions of sell orders, that means that price is going to battle, right? If there's $1 million worth of sell orders and $1 million worth of buy orders at the exact same place, price will stay still. That's how it works, right? So with all of these orders being here, if the algorithm wants to take price down, it would make it much easier and effortless because, again, this is just a programmed algorithm based on logic. It'd be much easier and effortless if we first took out all of the sellers because then their orders no longer get in the way of our objective, similar how they control the world. Silence everybody who has an opposite opinion. So that is essentially where we would be looking to take our entry from because we know now we're positioned in a place where it logically makes sense that the banks are going to take us with them. The algorithm is going to take us with it because our job isn't to trade like a bank. Our job is to understand how this algorithm is operating and can I maybe get into a place, an area of price where this algorithm is going to come, take orders and go away from. Because if I put my orders in with theirs, then I'm not going to move the market, but they're going to move the market and I'm in where they're moving the market from. So I'll probably make money, right? Very easy concept, very easy to understand. So just play price, price tags us in. Again, as it's a wick, what is that? It's a very fast buy to sell. Why the buy to sell? Again, I've just explained to you guys, it's to take out all of the liquidity, right? So it brought to sell because the real objective is to sell. The real objective is to sell, but it brought to take out all of the liquidity first, done it in the form of a wick, which is when you see a wick, it's always for the objective of a liquidation. And then price begins to move to the downside. Okay, great. So now we're tagged into our position. And now we've had this internal break of structure down here. But what do we have, right? We have another level of unmitigated supply. So usually in a time like this, I would be looking to go break even on my trade, but I can't go break even because it doesn't logically make sense. Why does it? Oh, let me get this up. Sorry, guys, I've had this on the chart. So why doesn't it logically make sense? Because if I'm expecting that price could come and collect the orders out of this level, then they could come and take out back into my entry, right? And if I was to be at break even, then that could just tag my break even and go because I'm expecting price to come down. Why would I ever put myself in a position where I could be taken out at break even if I think that price is coming back to my break even, right? As long as you're actually confident and not emotional, and watching price coming back and get scared and like FOMO and the fear of losing money, which is a huge psychological block that most traders, that kills most traders, comes in and sabotages you. But really and truly, we're expecting price could come back to this level. So for that reason, there is another entry opportunity for those of you who maybe missed out on the fine details of this one. So you go ahead and put your stop loss. Where we're targeting, same place, right? Because we're just literally trading the order flow. It's no different. Just literally let price play out. So what do we have in here? Again, algorithmically, we just have liquidity, right? It's stacked up. It's starting to form trendline liquidity, or it's starting to show a level of resistance, or whatever you guys want to call it, right? There's going to be traders out there. The algorithm is designed to do it fundamentally time and time again, regardless of time frame, as I've already explained. Price takes out the liquidity, tags into the trade, and then starts moving to the downside. Okay, cool. So price has had another breaker structure. Amazing. So now, logically speaking, price will not come and take out this high. Because of that, then this trade right here, because the stop loss, because the break-even point is above where it's illogical for price to come, then I can move my stop loss to break even. But on the trade that's right here, where if it comes to mitigate this level right here, which it very much could, it could put me at break even, so I can't go to break even. I'm going to save all these finer details. I'm just going to go to the 4-hour time frame. And that is essentially how I was able to get into that trade. And on I think it was the Friday just before market closed, I took some partial profits off at this level of demand. Why? Because I knew that this demand level right here was going to have a reaction over the weekend. And what's the point in just waiting over the weekend when you're so close to take profit? I took some profits, not all of them, because I like to see my trades just play out just for the satisfaction of being right. I knew price was going to react from here and then probably spend the whole week retracing to induce more liquidity, to create more liquidity under here, and then eventually go. So that's the logic to why I took some profits out. But you can kind of see like how price played out. And now we are here in the live market. So some of you may now be asking, what do you think is going on with gold right now? Like Audatus. Now, if we just take the exact same logic that we just went on, because again, we trade a pure systematic way of trading, it's just literally laws. I'm going to do nothing other than show you what I showed you right now. So, of course, you have to always be aware of both options, right? The law of polarity. The law of polarity states that everything has an opposite. So you can't have hot without cold. You can't have up without down. You can't have left without right. You can't have rich without broke, right? Everything has an opposite. So every nature has an opposite. So we can't just expect price to break down without also understanding that price can go up, because you can't have up without down. So the reality is because we've reacted from this level, because we've had a change of character inside of here, logically speaking, price could indeed go and take out these highs right here and go and mitigate this level, or this level, before then coming back down and very likely taking out these lows down here. That's scenario number one. Then if you look at it through a different lens, you can see that while it's already order flow bearish, we have lows down here, relatively equal lows, right? There's people looking at this right now and looking at this as a level of support. So we know that it's a huge liquidity pool, especially the higher the time frame you go, the larger amounts of liquidity that are sitting there, because the smaller banks, like private banks, HSBC, Barclays, like these private banks, they of course have trading desks too, and these private institutions, they trade these 4-hour and daily timeframes because the amount of money that they're putting into the market requires a large lot size, although you can actually get like filled if you have what they called back-end brokers. I forgot what they're called. They're basically second in line. You go direct to a bank. So you can get filled for lower time frame, but a lot of them genuinely just trade these high time frames. So you can see here that we have a level of support. So lots of traders are looking at gold right now and seeing that we've reacted from this level, and they're probably looking to get into buys anywhere in this support. They're probably seeing price come up right now, and they're probably people getting into buys right now. So there's lots of people right now buying gold, buying in on gold. Again, if the 95% are doing one thing, then you should probably do the opposite if you want to be in the 5% who actually win. So if everybody's long in gold, then logically speaking, short in gold would be good. But you have to understand how to short gold, and you have to understand where to short gold from. Because we had a change of character up, that could have confirmed, well, that did confirm to us that we were going to have a pullback from this high to this low. Again, we pull out our premium and discount, of course, because everything we teach here is universal. And you can see exactly that price pulls back to 50%. What's inside that 50% is a level of supply, which I'm going to go and show you right now. Because I've been trading for this amount of time, I already know that inside of this wick right here is a buy to sell. And inside of that buy to sell on probably a 1-hour time frame, it will look like a textbook order block. But I can myself use this wick as a level of supply. Let's go to the 1-hour time frame and take a look what it looks like. So what do we see? Lo and behold, we have a level of supply where a lot of volume came in at one time. So this buy to sell needs mitigating. And that's exactly what it did when it came and mitigated this. So how could you have possibly got back involved in the market there? Well, take a guess, right? Because it's no different to what we just did up here, because our system is robotic. So we go to the 15-minute time frame, as always. We put in a high, supply comes in, demand comes in, we put in a new high, we wait for the change of character. Change of character happens. Just going to go to the 2-minute time frame so you guys can again see in depth. Oh, would you look at that? It's exactly the same scenario as last time. That's not coincidental, because nothing is a coincidence. Everything is cause and effect. Sell orders, supply and control. Demand orders takes out the high. Demand is in control. Supply takes out the demand that took control of the market. So now there is more sells than there are buyers from a level we're already expecting the banks to get back involved in selling. I mean, it makes sense to sell, right? So where would you take your position from? Well, once again, you would take this level right here, which is your supply zone, which causes the change of character. Where would you target? You would target the week low. Now, of course, price doesn't need to pull back here. Again, logically, price doesn't have to just come back to here. Price could come back anywhere from this high to this low. Price could even come back all the way up here because there's logic to support it. But there's also logic to support this. And I am very happy to risk 1% in return to make 21%. As traders, I only have, to be honest, like a 30%, 35% strike rate. Because to be honest, like, let's say there's 4 order blocks, right? Let's say there's 4 order blocks on any one leg. 1 order block, 2 order block, 3 order block, 4 order blocks. And let's say in each order block, you have 2 changes of characters, right? Worst case scenario. So you get 2 stop losses here, 2 stop losses here, 2 stop losses here. There's 6 losses. Or that's well over exaggerated. Let's say you take a loss here, and then a win here. That's more like it, right? You're not wrong. It just wasn't the time. You're not wrong. It just wasn't the time. Oh, look, now it's the time. You're not right. It was just the time. So it was just the level, sorry, that price was supposed to come out from. So if I lose this, but win this, that's 1 to 3, which is 33% win rate. So I can lose 2, win 1, but the one that I win can be 24, 33, 24, 12, 8, 7, anything more than 3, and I'm profitable. Ideally, a lot more than 3 because of the time horizon that we're trading on. So when it's 21, 24, and 33, and you're losing 7 out of 10 trades, or 6 out of 10 trades in between there, you become very profitable, right? So you just have to kind of learn how to just accept probability as you are a trader. That's what you do. So lo and behold, of course, let price play out. Price tags in, catch it, and then pretty much it's just going to take you to where we are today, right? Which is here. Okay, which is here, right? So we still haven't hit take profits on this level. But again, going into the detail again, let's go back to the 4 hour. Just as we had a change of character up on the 4 hour, which is buy comes in, sell comes in, puts in new low, buy comes in, takes out sell, demanding control, change of character. Buy comes in, sell comes in, buy comes in, sell comes in. Sell takes out demand, change of character. So right now, supply is in control on the 4 hour time frame. And there is an unmitigated level of supply right here. So logically speaking, gold right now, what I'm looking for is a move into this point of interest, 15-minute change of character, entry, take out this low as TP1, take out this low as TP2, take out this low as TP3. Because that's just the rule-based approach that we take. Granted, price could then come and just take out these highs as there is liquidity built up there. And then price could come and mitigate this POI deeper, or this, or even this. Or it could literally just come and take out all of the highs and come and mitigate these. But we're just going to take one by one. We're just going to trade one by one and react from each OB each time, right? It's very simple. So that is essentially what I'm looking at for gold. I'm looking at right now a reaction from this 4 hour demand zone, this 4 hour supply zone. I want that 4 hour supply zone to give me my confirmation, which you guys already know now is my shift, change of character, entry, exit, exit, exit. That's what I'm waiting for right now on gold. And of course there are, like, that is the whole entire system composed down into as simple terms and as fast as I possibly can. There's a lot more that I can say. There's a lot more that I need to go down and break down, because I'm an architect, not literally. I don't build houses, but the way I think about things, I'm an architect. I structure things in my mind and then create them out of here. So I like to structure the concepts and break them down all at once. Okay, let's go. Any questions you guys have? Please hit me up. Blackwatch, where'd you learn from? Blackwatch, I'm pretty sure you're one of the founders of Phantom. I've never learned from Phantom. MentFX isn't a student of Phantom. Fractal Markets doesn't trade the same system as Phantom. So Phantom have very little relevance. I've never been through Phantom myself. I don't know what they're teaching there, but I spoke to both Anton and Tyson, and neither of them trade the same strategy as Phantom. Similar concepts, of course, but yeah, none of them actually trade the style of Phantom. So originally I've learned from quite a few people, because I take individual concepts from a lot of different traders. Like there's even a mentor that I've not told anyone about. He doesn't have socials. I met him in person. He's the guy who really gave me the simplicity of the structure. But because before I was watching MENTFX and he was teaching Wyckoff, and it just like confused the shit out of me. So Wyckoff is a no good, in my opinion at least. And then fractal markets. Fractal's pretty interesting. Fractal's an amazing guy. Fractal's one of the only like raw authentic traders that I personally know. Fractal taught me a lot, but we just trade different styles now, because what suits Fractal suits Fractal. Fractal takes trades like from the 15-second time frame, sometimes 1 minute time frame also. But yeah, I don't. But yeah, some of the concepts like his name is Fractal Markets, so he goes deep into fractal markets, literally like fractals. What I just showed you, the multiple time frame situation. Okay, students of Phantom. Yeah, again, I don't. Oh, no worries. Both were with us for a good few months. Anton never mentioned Phantom, and of course Tyson did mention Phantom, but Tyson also mentioned that he doesn't trade the same system as Phantom. Again, no discredit to Phantom. I have no idea. I know who they are. I have no idea what they teach or who's involved in them. But yeah, of course, they're SMC, right? There's a handful of SMC communities out there, and hats off. Like, I love the SMC community, because really and truly, we're the only ones that actually trade, at least in my view, the laws of the nature, the laws of the universe in trading format. Now, I don't know how any of you guys explain it. I know Ment and Tyson never explained it to me through the eyes of cause and effect or duality or those types of things, because, well, simply put, they probably don't know those concepts of universal principles. I took that knowledge myself, and then understood that everything that I was learning through trading, everything I was piecing together, fit into the universal principles of things like causality, of things like correspondence, and those sorts of things. And that's why in Prosperity Academy, we are the only trading community, and I can say this hands down, we're the only trading community to teach people the direct relation between spirituality, psychology, and trading, because so many people are one second, I'll read those comments in a moment, guys. So many people get the same content. Like, you don't understand how many people we've had come through our academy, and a fraction of them actually achieve funded accounts, and I'm assuming that's all the same in every different community, and nobody talks about the reason why. Everyone just thinks they're not doing it correctly, but no, it's a direct correlation to their programs, right? I don't want to go off on you, but if you watched my live with the Trading Up before, I explained my thesis of how basically we live in a algorithmic simulation, and the simulation projects to us what we see as physical reality is just our programs. And we have 3 different programs. We have the mind, we have the spirit, and we have the body. The mind is our thoughts, the spirit is our emotions, and the body is our actions. And you have to align all 3 of those dimensions into one specific intention to actually achieve success in anything. And that's why that's why a lot of people don't ever get funded, because you can give them all the trading material. I just give you so much value right there. But the probability is that maybe 1% of you will actually go and take that information and be able to do anything with it, because you're running and operating on completely different programs. You guys are running on programs that don't actually support your intention. And yeah, like, we are the only community in this space as a whole, even from the biggest guys, that really go into the depths of that, at least from what I've seen. Because this is all great. Like, all these concepts essentially are centralized. They all come from everywhere, right? You have MentFX who teaches, you have Phantom, you have, I'm just talking smart money now. I'm not talking about like Q and Anthony, like the kind of big retail traders. I'm talking about SMC. Everybody uses everybody's stuff. Phantom was the original creator of Wyckoff S&D. I mean, if that's what you want to say, bro, that's cool. The original founder is literally Richard Wyckoff. That's why it's called Wyckoff. And there's a book. If any of you guys want to check out a book, I'm not sure when this book was written, a long time ago, way before any of us guys in the smart money industry were trading, right? There's a book, and it's called Trading. What's it called? The Market Makers Matrix, right? The Market Makers Matrix. And that is a book written about the nature of smart money and the truth of its operations, the laws of supply and demand, changes of character, premium and discount, multiple time frame structure, Wyckoff. That book was around a long time ago. So that really none of us here are founders. We're all just students of the game, and we've took those concepts and we brought them together in-house, created our own systems, and now we're putting them out there to share the abundance, share the natural law of abundance into the world, so that other people can walk the path that we've walked. So I don't believe in competition. I don't believe in competition. I only believe in creation, and that's the difference, I guess, between the abundance and lack, right? Abundance is creation, and competition is limitation. If you're competing with somebody, that means that there's not enough. And if there's not enough, that's lack. So you'll never be able to experience a reality of all you want, because you're focusing on a reality where there's not enough. Written by Evan Christopher. Not what I meant, really, just the merger of the two concepts to become what most teachers SMC now. We didn't find Wyckoff for S&D, of course not. Yeah, of course. And there's another guy, ICT, Inner Circle Trader. Like, everybody says that he's the founder of Smart Money Concepts. And like, all hats off, maybe he is. Like, there are so many different places that the concepts come from, but I guarantee what we teach here at Prosperity is different to what you teach there at Phantom, or what MentFX teaches, or what Tyson teaches. Because we take them and we create our own things, and we test our own things, and we come up with new systems, and we teach differently, and all sorts of that. With all due respect, non-traders who teach this have invented anything. Well, of course. With all due respect, non-traders who teach this days have invented nothing. All the trading concept have been there, is just reached with different mind perspective. Well, absolutely, because if you just actually go back to the fundamental laws of the universe, we didn't create nothing. We discovered it. So even things like inventions, electricity was always here. It just took somebody to figure out how to make it work. Electricity wasn't created. It was always here. It just took a genius to come through and find a way how to actualize electricity or discover it. So nothing was created. Everything is discovered. It's the law of everything, literally. First time here, welcome, bro. Hey, where can I reach to you? So personally, you can reach me on Instagram, and Instagram for me is Lewis Kelly 55. If you guys want to reach me on Instagram, that's my Instagram handle. If you want to reach the trading page, our trading Instagram or our trading YouTube, we're literally the fastest growing smart money trading community in the entire space. And it's just a fact. Our YouTube is insanely valuable. We are putting so much value out on YouTube like nobody else, because we don't believe in competition, right? We just believe in creation. So our ultimate intention isn't to try to sell people things. Our ultimate intention is to bring these concepts to as many lives as possible and teach them in a way that those individuals can then use those concepts to create a life of freedom, because that is abundance. That is the law of creation. And the more you do that, the more you will be rewarded for it, which is the laws of cause and effect, or the law of vibration, or law of attraction, maybe some of you have heard of. So yeah, still waiting on gold here. So nothing really to talk about when it comes to trading. I mean, I could go and show you a whole bunch of other pairs, but there's just not really much going on, like, in all honesty. I mean, we have EU, again, bearish order flow on EU, low, high, lower low. Well, even could call this a lower low, actually. We have low, high, lower low, lower high, lower low. So swing point from high to low. Fib, we've already pulled up. We've taken out the high now. This is a buy to sell. On a daily time frame, it's seen as order block. We have a refined 4-hour zone. Prices in that had a change of character. And I see all this right here as liquidity. I know there were some guys in our community asking basically about that's Instagram. If anybody wants to see the YouTube channel, you can literally just type this and you'll find us. Or there's links down below on this live as well. You can go and check the links, but those links will probably give you some sort of free trial or some direct product into something that you have to pay for. You can go and check our YouTube literally for free. So EU is pretty much the same. Just waiting for the same thing. Either this OB up here or this will get swept and then react to this, and then I'll wait for the confirmations that I need and just take out really the order flow swing lows. GU, just very messy right now, to be honest. So I'm not really interested in GU. There's a lot going on from a macro perspective with the UK. So the pound is just, yeah. I mean, technicals always give the real answer, but you can't be naive and say that macros don't affect it. How I see it is the law of oneness, right? They both complement each other. So if you understand the macroeconomics of certain nations and governments, then you can understand what their overall thesis of their currency, their economy is. And so you can essentially use that information to align technicals with that. But yeah, the pound dollar right now, not interested in. USD IDR, this is just something I have for my personal, because I live at the moment in Bali, Indonesia, Bali. I've been here now for about a year. So yeah, I held IDR and now I hold dollar. So I just always have this out because I'm always understanding what is my purchasing power in relation to the place I'm staying, which is very important. Which the purchasing power is amazing right now. So waiting for essentially these highs to be taken out. And then literally, as funny as it sounds, I can go and take this information, wait for highs like this to be taken out to the point where the dollar has a lot of purchasing power over the IDR. And as a result of that, I can just go and book, like go and pay outright for X, Y, and Z in IDR and get a better exchange rate, get better value on what it is I'm buying. Maybe I want to go and buy a house or put money down on a house as an asset, then I can get a much better deal because of that. So that's just something I have there. AU, again, I have ties to Australia financially. But yeah, AU, very bearish, easy to see. Swing lows will likely be taken out. When, don't know, so deep into the price leg, not really looking at trading it. And then of course gold, which is where I'm really looking at the moment. Gold really is interesting right now as well because of the macros. So I've really been enjoying trading gold recently. Do you have any questions? Anything any of you guys want to go through? I have doubts because small cycles constitute large cycles, whether it is necessary to find accurate orders to flow in the market. For example, many times we see that price did not reach our preset order cycle. But in smaller cycles, it can be seen that it just entered the corresponding order flow. Can we continue to enter the small cycle to the 1 minute or 5 minute cycle to each corresponding effective order flow trade? Hey bro, could you try to simplify what it is that you're explaining? Because I also want to explain your question to everyone else. And then I'll try and go over it. It's simply about supply and demand with trends. Yeah, literally, it's very easy stuff. It's nothing complicated. The real value, like what's actually important, is your mindset, right? The programs that you're operating inside of your mind. If I go back to the idea of that we live in a simulation, we basically live in a video game, and what we think, what we feel, and what we do creates our reality, right? Like I was once broke. I was raised in not necessarily poverty, but I wasn't raised with a silver spoon. I was raised by a single mother. I was raised in a 2-bedroom flat, which like a 2-bedroom apartment in a not so nice area of England. So like I'm very relatable to a lot of people. I wasn't born with anything. I wasn't born into any wealth. I failed in school. I got like rarely any GCSEs. I didn't go to college. I didn't get a university degree. I fundamentally don't believe in that. But what I did do is I learned how to create my own reality. I learned how your subconscious thought programs affect your reality. What you think, what you feel, what you do, it all actually accumulates into what you get. What you think, what you feel, and what you do equals what you get. So you have to understand what are the thought processes? What are the thought patterns that subconsciously go on in my mind on a day-to-day basis? And how are they affecting my life? What beliefs do I have about money? Do I believe money is the root of all evil? Because if I believe money is the root of all evil, then how will I ever get any money? Because I believe they're contrary. I want money on one hand, but I believe that all the rich people in the world are just evil. That doesn't make sense, because then if I'm rich, I'm evil, but you don't want to be evil. So you don't get rich, right? These things. Believing that money requires hard work, or money doesn't grow on trees. Maybe your parents programmed you. So we've been programmed. I was programmed as a child with these limitations, with this lack, with this programs, this codes, these computer programs that would rule in my life, and they were just creating failure and negativity and lack, no money, no success, no nothing. But I finally, through self-exploration, through attaining deep level knowledge for the many, many years that I've been on this journey now. I'm 21, by the way, guys. I'm 22 in about 2 months. In January, I turned 2022. I've been studying since I was like 15 years old. I've been meditating since I was like 17 years old. So I've really done the work, gone inside myself, reprogrammed myself. So now that I live a life of abundance and wealth and prosperity and freedom and love. I have a beautiful woman in my life who's like literally God in human form. I created all of that. Nothing happens by mistake. Everything is cause and effect. Everything is input equals output. So whatever you input, as within, so without. Everything you input into yourself will project outwards. So your physical reality that you are living right now is a result of your inputs, the thought processes, the actions, the habits that you have, the emotions that you're addicted to. Those things are controlling your life. And if you really want to achieve success, you need to shift those. And that's, again, a huge part of why what we're doing here at Prosperity Academy is game changing, because there isn't anybody out there that trades, that knows the type of things that we know. We literally have masters of alchemy, of hermeticism, of ancient knowledge, the ancient truths about reality that work for our company, that are even founders in our company, and they teach how to create your own reality. And that's really the game changing between us and any other academy that you're going to find out there. And that's just my opinion, of course. You'd have to take the opinion of others that have been through it. Is Choc and BOS the same? No. Break of structure is swing points, right? So let me show you an example. Break of structure, break of structure, break of structure, break of structure. So you can see that every time a swing point gets broken, here, 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 and finally here, all of those are breaks of structure, right? All of those right there are breaks of structure. Now, what about if the supply zone, right? What about if, let's take this back. Whoa. So here we have a supply zone. Here we have a supply zone that put the low in. Now it's important to understand that this break of structure actually came from this high that put in this low. So the break structure came from that high, but then when price does this, that right there is a change of character. Why? Because demand has taken out supply. Here is supply. Here is demand. Demand comes into the market, takes out the supply. Supply comes in, demand takes out. That's a change of character. Now, just because the change of character happened does not mean that price is then going to go back on to be bullish. Because price can then just very easily respect this high and then go and do a new break of structure. So that's the difference between change of character and break of structure. That's a break of structure. This is a change of character. I hope that makes sense. Bro, you have motivated me to change my ways as I know better. Respect to you, bro. Respect to you for having the awareness, the humility, and the ability to accept the fact that you probably need to change your ways, because changing your ways will change your life. Not many people can do that, right? That's the first step of actually evolving, is realizing, shit, I need to evolve. That's step number one. Step number two is finding a place where you can evolve, people that you can evolve with, people that can teach you information. If you want to know some of the stuff that I'm talking about, one great place to start for beginners is, I've already said before, Dr. Joe Dispenza. He would literally teach you the nature of the mind and stuff like that. That right there is the difference between a break of structure and a change of character. Do you have any other questions? Go back to private chat. How many months out of the year do you trade? Pretty much every month. I just don't really look at the charts from kind of December 15th to January 15th. So I'll take that month out. And the reason is because it's my best friend and my business partner's birthday in the end of December. It's Christmas at the end of December, and it's New Year's. And then it's my mother's birthday, and then it's my birthday, all before the 5th of January. So other than that month, which is where I usually just take holidays and take people on holiday or go and see family and like just enjoy life. That's why I've done this for. But no, really and truly every month. But the thing is it takes me minimal time to trade. I'm literally checking the charts like not long per day, because when I know price is in an expansion phase like this one right here, what's the point in me checking the charts every hour, every 5 minutes, every 10 minutes just to see what my trade's doing? It's simple. I need to wait for the price to come and hit this order block to give a reaction or start reversing, and then that's something interesting. When price starts approaching an area of interest, point of interest, that's then when I look to get more active on the charts and spending more time to, well, not even spending more time, just setting alerts. When the alerts get set, sure, for that kind of like, it can be like an hour, it can be 3 hours, it can be 5 hours. I'll be checking the phone a lot or checking the desk setup a lot, because that's where the activity is taking place. But other than that, I'm just working on things. I'm a big macro investor. I'm big crypto investor. I have other business ventures. I love property. We're doing I can't say too much because I just can't say too much, but we're doing some pretty big things with the biggest traders in the entire industry. And I'm not talking smart money. Can't really say too much, but a lot of big things are going on. So I have a lot to work on. I love business. Small cycles changes will affect large cycle changes. Yes, absolutely. In order to find an accurate entry order flow, should we go to a smaller cycle to determine the effective order flow corresponding to a time period of 5 minutes or 1 minute? You don't want to focus on the smaller cycle until you're in a place where the larger cycle is likely to do something. For example, I'm not interested in what the smaller timeframes are doing in this whole time period, really. I mean, maybe in here, there's a few moves that you could catch, counter order flow, lower time frame that I'm not going into right here. But really, I'm only interested in the smaller time frame when we're in areas like this, or when we're in areas like this. I hope that does answer your question. Do you trade NASDAQ, and what time frame you use on NASDAQ? I don't trade NASDAQ, no. If you want, I can go and is that correct? Correct, no? Shout out to you, Benji. Big appreciation, brother. I appreciate that. The NASDAQ, I'm trying to find this index. I don't know exactly what one. Okay, fundamentally, no, I don't. But however, if you go to my Twitter, literally, if you go to my Twitter, which is, you can see it right here. My Twitter is, I believe that's my Twitter. If you go to my Twitter, you will literally see me calling the stock market crash like 6 months before it happened, just based off macro information. Then when the technicals kind of confirmed back in like January, so the start of the year is when I really went deep on indexes and explained like, look, because I understand what's happening on a macro cycle. I'm a big macro guy, so I'm not going to go into too much detail here, but the entire economy, the entire nation's economy of America specifically is not looking great right now. The entire world economy is not looking great right now. For certain purposes, for certain agendas that I'm not going to go into too much detail on, but it was evident that we were gonna see what we're seeing, right? It was very, very evident from a macro perspective. And then back in January of 22, the end of last year, it became very evident from a technical perspective as well. So you can go and see my Twitter. You can go and literally see, I've called a lot of the crypto tops or certain stocks or certain indexes just for fun, just because I enjoy it. Next question: what time frame would I use if I was to trade the Nasdaq? It would just be the same as what I use now. It's just fundamental. It's like 4 hour, realistically, like daily 4 hour 15-minute, or daily 4 hour 1 hour 15-minute. Just look at those. What's better, London session or New York session, and why? If you're trading GU, I mean, I have 2 points on this, right? Point number one is if you're trading GU, you're trading both the pound and the dollar. So like there's going to be volatility in both those because it's the pound and the dollar. But just the session time alone doesn't even necessarily interpret it doesn't conclude the volume of the session just because it's based on the currency. It doesn't actually work like that. Another thing I will say is New York can seem a lot more volatile because, well, of course, it's America. So there's a lot more activity in America. That's just general thesis of how it is. But there is no better or worse. There just is, right? There, again, polarity. Like you can say what's good, what's bad, but they both fundamentally are just neutral. It's just a time. You know, you can literally go through 1 month's worth of back testing, and you can back test 1 month with the strategy. And for example, August, there may have been more trades in New York session than there was in London. Then you can go and back test September or October, and there'll be more in London than there were in New York. It just really depends. Like there is no better or worse, in my opinion, at least for our system. Also, at least, I mean, Asia session kind of granted. There's much lower volatility than there is New York and London. However, with that being said, when I used to trade UJ before it kind of did its crazy thing, because I live in Bali, I'm in alignment with the Asian session, and I would trade UJ. This was back in February of 22. So the start of this year, Feb 22, you can go and check it on UJ. Literally, bro, when Asia session started every morning, there would be there'd be this one specific move that kept on occurring. And we caught that a couple of times. And then there was a period of time around the same time where the start of London, UJ would do the same move every time. The same kind of Frankfurt sweep of Asia and reversal. And it just flowed like that. I don't know for what reason it was. But that's just my point is that there is no better or worse. It depends on what your perception of good and bad. If you want volume, then you'll want to go for London and New York. But if you want truth, then you're going to have to go and back test and see what did what when. And that's why I don't have a basis on opinion, is because one day there could be a beautiful trade in Asia and not New York and London, and vice versa. So yeah, just kind of rant in there, but opinion. Can you explain more about your course? I mean, it's easy, really. It's just everything broken down, simply put together and explored in depth. Like I'm not really here to sell any courses. Go and check my YouTube channel. That's free. Huge fan. Thank you, brother. Nasdaq 100. Lewis Kelly. Lorenzo, shout out, bro. Hope you're good. No need to thank me, brother. Thank you. I'm trying to get out of Wales and hit up Asia within 6 months. Nice, bro. Best of luck with that. Also, your quantitative thinking changed my life, bro. Would love to catch up one day. Absolutely. If ever you do head over to Asia, whether it be Bali or whether you're ever in like a Dubai or something, like hit me up. Ticker for Nasdaq QQQ. Thank you, bro. Any questions? Anything specific you guys want me to go into. Anything you guys want me to go into, anything you guys want to know, whilst essentially we just kind of wait for gold to do its thing, which it's likely not gonna in this session, to be honest. But if anyone wants to go over anything, more than happy to teach you guys some things. I'm gonna block this. Again, anyone that free content, literally. In case you can't stay here for long or you need to go or something, everything that I'm pretty much teaching in here has already been taught on YouTube. Do you, very, very, very interesting question. Do you think the algorithm will change if XRP and the SWIFT deal happen? I'm going to go and get a glass of water. Give me 1 second. I'm going to run, step out of the office for a second. I'm going to go get a glass of water, and then I want to speak about that subject. That's very interesting. If any of you guys in here are interested in cryptocurrency as a whole, you're going to want to stick around for the next 30 minutes because it's probably going to get deep. Well, people in that, everyone takes everyone's concepts and all reads them. They all read the step from. But you're going to do that one. Let's talk about XRP. Let's talk about XRP. Yo, yo. Okay, so pretty much everybody stayed around. That's pretty cool. So the question that I'm going to come back to in a minute, because there's a couple of trading questions here. But a question that I'm going to come back to in a minute is regarding trading, and that will be you, DJ. For now, let me go through a couple of these. Do you consider imbalances while trading? That was the question. Well, honestly, imbalances are only good for one thing, in my opinion. And the imbalance is only good to understand where is unmitigated and where is mitigated. So anywhere there is imbalance is basically going to be unmitigated, right? Because price hasn't filled in those orders. It hasn't mitigated those levels. So that's how we use imbalance. From levels of supply and demand, from levels of order blocks, that's when you'll essentially understand where there is imbalance. So you can see right here, we spoke about this, maybe you wasn't here, but the first wick and the third wick is what you use to measure. And if there's a gap in the middle, that is imbalance, right? But every time there is that gap, that then is a level of supply or demand, which it leaves an order block, which if that order block is of relative importance, then it will probably have a reaction. So imbalance in of itself is not very important, but yeah, we do still consider it, of course. How to adapt the best trading philosophy. This is a deep one. I don't want to go too far into this because we don't have loads of, I guess we still have at least an hour. How to adapt the best trading philosophy. There's so many different layers that I want to go into, but I don't want to go into all of the layers. So some of them are literally one thing is your prosperity consciousness. Prosperity consciousness is just essentially your rate of consciousness, which is kind of like vibration or the mental proceeds of the mind in relation to prosperity, which is like abundance. So what is your relationship with prosperity? That's what we call Prosperity Academy. What is your relationship to abundance? Adopting a trading philosophy that is of prosperity consciousness is super important, because you can have many traders who all learn the exact same trading strategy and all get different results. So therefore, there is obviously other factors that come into play. And we know that is trading psychology. And under trading psychology is your prosperity consciousness, right? It's what programs, as I spoke about before, what code are you projecting onto this, matrix or this program? What code are you projecting onto this holographic reality? What beliefs do you hold? What actions do you take? So the trading philosophy, the best trading philosophy is to just literally adopt, like plain and simple, adopt a prosperity consciousness, because that will help everything. If you have a prosperity consciousness and you're in a state of abundance, then that's pretty much everything. But of course, how to get that and what it consists of and all of that sort of stuff is a whole different ballgame that I'm not going to go into right now. But yeah, how to adapt the best trading philosophy would be to adopt a prosperity consciousness. How do you manage your trades when you are in the wrong? Do you cut your losses short, or do you let your trade hit stop loss? I always trade with a stop loss. I always trade with a stop loss. In my opinion, if you're not trading with a stop loss, then what is it that you are trading? Because, I mean, I don't know. I just don't get that. If you have a thesis, if you have a theory that price is going to do X, Y, and Z, then at some point in time, your thesis, your bias is going to be invalidated by something. What do I mean by that? I mean, if price is like this, price pulls back, gives this. So your thesis is to get involved on this order block right here. Right? And because that's where it's realigned, you're expecting now that this high is to be taken out. So you will take a long here, why would you ever put your stop loss anywhere other than at the level where if that level gets taken out, it invalidates your bias, it invalidates your thesis. So because the minute that this low gets taken out, I'm no longer looking for the longs because supply is taking control of the market. So then why would I ever have a stop loss anywhere other than a place that would just invalidate the trade idea? Hope that makes sense. Like, why would I have a stop loss down here if the minute that this happens, I'm no longer looking to long because I'm expecting lower lows until eventually it shifts again. Then I'll get back in here with my stop loss under here, not down here, because I'm expecting this, right? Providing that, of course, the order flow was on point. Hope that makes sense. Hope that makes sense. How do you manage your trades? Oh yeah, that was it. I struggle with seeing liquidity build up. I struggle with seeing liquidity build up in a range, but can't work out whether we go higher, lower liquidity from the past. So how far back do I look in regards with the algo taking liquidity? So very simple. It's very simple. Liquidity is not the most important thing, but it is important. It's step number 3 in our plan. So first and foremost, you obviously have a bias. So if your bias is bearish and your order flow point is order flow 1, order flow 2, so you're never worried about liquidity that may be sitting here or maybe sitting up here that's going to be taken at a later date, because we're only focused right now on this high and this low. So you only want to be looking at liquidity that's in the range of your swing price. Second of all, any liquidity is below 50% of the leg. So any liquidity that is in discount, we also don't want to be looking at because we're not interested in trading from here. So we're expecting all of that liquidity to be run anyway. So that just becomes irrelevant pretty much. And then you're going to be left with probably 1 to 3 levels of supply inside of the leg. And then pretty much, like, if there is liquidity here, just still trade the reaction, right? Because liquidity is number 3. So if you see this happen, don't try to wait for this liquidity. Just trade this. And if you take a -1, amazing. You get back in here again. And if there's more liquidity here, and then you take another a -1, amazing. And then you get in here. Right, it's the last point that can hold up. So the probability of this one holding is so high that it's likely you're going to do that. And the higher it gets into the leg, the higher the risk to reward to take out the low, providing the stop loss size, of course. So you take 1 loss, you take 2 losses, and then you win one, 33% win rate. But then the win is 30R, 20R, 12R. That's what I would focus on. I hope that makes sense. Not sure if I missed it. What time frame do you draw your supply and demand on? 4 hour and 15 minute. 4 hour for the higher time frame, the point of interest, and then 15-minute for the entries, the confirmation. Thank you for your explanation. You're welcome. Thank you for asking my question. I have another one. Do you stack up orders or you scalp in? Also, an average, how many trades do you take a day? Yes, I stack orders. Yes, I also scalp in. Also, on average, how many trades do you take per day? I don't take a trade every single day. I don't take daily trades. Like some of the trades I might wait a week for a trade. With our scalping only strategy, you take trades like once a day or once every 2 days. But I don't trade that way anymore because I don't need to. Sorry, I'm just trying to get another drink brought in because at the moment, I'm just going to run and grab another drink fast because for some reason I have a crazily dry throat and that did nothing.
Wait, my phone is gonna die. Jeez.
Okay, hopefully this does the job. I'm going to come back to your questions now, guys. So, do you stack orders? Yes. Do you scalp in? Yes. On average, how many trades? Okay, I just went over that one. Just to reiterate, at the place I am at right now in my career, I don't need to sit at the charts for hours a day waiting for trades because, to be quite frank, I just don't need to. I value my time a lot higher. I am focused on growing businesses and companies and myself and just actually enjoying my life also. Yeah, I have a master plan, a kind of like 5-10 year master plan, and I'm a year into that master plan. So now I'm not required to sit here for 3 hours a day and trade. However, I do trade my swing trading system, which is kind of what we just went through on gold. These trades are the swing trading system or the day trading system. But we do have a scalping strategy that I used to use when I sat in front of the chart 3 hours a day. That is actually in the course. We're having a whole rebranding. Not rebranding, sorry. We're having a whole restructuring of our course. So I'm at the moment building an entirely new course that's going to have all the different trading strategies in there, the time frames, etc. All the different strategies, so that everyone can come there and decide, okay, you want to scalp, scalp. You want to swing, swing. You want to swing and scalp, swing and scalp. So when that's released, which will be the end of this month, our products will be literally doubling in price, if not more. But anyone who has our products at the time where it's released will get them for free, which is amazing news for everyone that already has them. Before your water break, you said something about a question about if the algorithm can change. I'm going to go into that in a moment. Okay, no more questions. Now I'm going to go into that question. So before your water break, okay, so I had a question from someone who's in Prosperity Academy, and he asked, because he understands how we're a very tight family in our community. So like we're not just traders, we're everything. We do lots of different things. So he asked me the question, do you think that algo will change if XRP and the Swift deal happen? So number one, the XRP and the Swift deals already happened behind closed doors. Just for you, DJ. The second one is that you guys have to have some context of what is XRP. Before I try to explain this. So in a short story, I will tell you no, the algo won't change, and then I'll explain why. So XRP essentially is a it's a cryptocurrency, right? But it's founded by a company called Ripple, who specialize in fintech, financial technology. Now, Ripple, this company, created this fintech to basically completely revolutionize the process of transactions and sending payment from A to B. At the moment, we use a system called SWIFT and a fiat system. And this system is time consuming, it's expensive, and it has a fairly high failure rate. XRP, and more specifically Ripple, completely fix that with a solution. So there's an interledger protocol technology, which is essentially one centralized piece of technology, which ties perfectly into the one world government and the hidden agenda that the world's elite have to control the entire population. But I won't go into too much detail, just in case we get into trouble. So they created XRP. They're the founders behind XRP. And essentially, they're going to use it to try and enslave the entirety of humanity. How? Because with XRP, essentially, every single transaction will be recorded on this one ledger. Banks will use their own central bank digital currencies, which are digital versions of fiat currency. So yes, the world is digital. We will not have cash. Everything will be digital. The problem with this system is that essentially they'll be able to program your dollars and control you. There will not be a penny that goes under the radar that they will not see. And if they want to, because they're going to have everybody on universal basic income, I'm creating a lot of content at the moment for personal brand where I'm going to go deep into all of this stuff. So I'm not going to go too deep into it because I could sit here and speak about this for like 3 hours. In a nutshell, no, the algorithm will not be changing. And the reason the algorithm will not be changing is because fundamentally there is always going to be money in and money out of the market. And there can't be any other laws other than the rule of supply and demand and the rule of cause and effect, which is liquidity, and the rule of fractals, which is universal, because they're universal principles. So you can't change them because for those rules not to be in place, there would be no market. There would be no market. And then even if you look really, when I get technical about it, back in the day when you used to trade corn, or I trade my corn for your, I trade my corn for your broccoli. If more people want broccoli than corn, then all of a sudden it's going to take more corn to get broccoli. Natural law of supply and demand, which is simply put that if I have one apple and 1 million people want that one apple, that apple is going to sell to the highest bidder. So we have 1 million different people wanting one apple. It's going to go to the highest bidder. Now, if there's one person and 1 million different people selling apples, and they're all the same apples, that one person has the leverage. So that one person is going to get it for the cheapest price to whoever, for the lowest bidder, right? That's the law of supply and demand. So that law will always exist in markets, and it can only work in the way that we have it right now. Price going up and down and mitigation can never be changed because price always has to move in the law of rhythm, right? There's a universal principle that's rhythm. That's like you can't have highs without lows. You can't have lows without highs. It rhythms it up and down, up and down. A heartbeat is up and down, up and down, up and down. Everything in life is up and down, up and down, up and down. It's the law of rhythm. So you'll never be able to get rid of the fractal nature of market structure. You're never able to get rid of the laws of supply and demand. And you'll never be able to get rid of liquidity, which is cause and effect. So in short, know that you can't change the algorithm. You can change the algorithm, but the results are always going to be the same. You're always going to have, look, if we go like the algorithm is always changing, right? Based off new data. But if we go all the way back to, I don't know, 2008, look at how, this is 2008. Look at how levels of demand still get respected, right? I mean, I don't know if that actually pulls back 50%, which is interesting. But price doesn't do that 100% of the time anyway. It pulls back to the level of demand that's at 50%. So yeah, fundamentally no, because then when did supply kick in the market? So then you can see what happens. This is in 2011. Price liquidates the high. Price gives a change of character. The supply level that's only the only supply level that's unmitigated, that caused the change of character, gets mitigated. And then price decreases. Right? Price literally mitigates this level. And then gold, you know, has its pullback or whatever. And then we have all of this, but it's all supply and demand. Like literally, it's always been the same, right? The thing is you never know what supply and demand is going to be, and that's how we trade confirmations, right? So if you just pull out the fib from high to low, you have to mark out this order block as one potential. So maybe you can see here that the price probably would have got you into a trade. You would have come down. You would have got taken out at break even more than likely. And then there's a different option, which is this one, which is then the one that price respected and went and taken out the swing lows. This is 2020. So you can see all throughout history, price literally governs the same rules. But do you think the algorithm has stayed the same this whole time? The answer is no. The algorithm is always changing. But you can't avoid the rules of supply and demand. You can't avoid the rules of sweeps of liquidity, and you can't avoid the rules of fractal market structure, because that is the nature of the markets, because everything mirrors the nature of reality. I'm not trying to go too philosophical on you, but it just is. So yeah, DJ and short, bro, nah. The algo will of course change. It'll always change, but there'll always be opportunity to trade this system on Forex, because there'll be central bank digital currencies. So you'll be able to trade the dollar against the euro just as you do now. The only difference is that there'll be a one world government that doesn't just own America like the Federal Reserve does. It will own all of the nations and all of the printing of all of the money in the world. Just more centralization. Heavy. Is it recommended to have many timeframes to plot an order block? It depends on your preference. For us here at Prosperity Academy, no, we just have one time frame. And yeah, sometimes we look at the daily time frame or the weekly time frame to understand the overall order flow from a more zoomed out perspective. What do I mean by that? So right now you can see this is the perception, but if I go to the monthly time frame, what's actually happening for gold? Price is putting a new high and now it's having a pullback. So in reality for gold, take swing low, take swing high, we're looking at price to come to around 1566, which, is it done that yet? I'm not sure. Which it hasn't done yet. So like at least I would be expecting price to come to the 50%, like from a weekly perspective, but the price could like come from here, come from here, come from here, even come all the way down here. Take a look at Bitcoin the reason that I knew Bitcoin was going to crash and where it was crashing to was because of the same reason. So yeah, sometimes we zoom out to understand it, but I know that gold is pullback phase of monthly time frame, which means very bearish order flow on 4-hour time frame. Just fractals. Right? I know that because that we're pulling back on the weekly, the 4 hours is going to look like this. Very, very bearish. So we can take a lot of shorts. How heavy are you on fundamentals and what are the key points when analyzing? I do not use fundamentals to get into any actual trades. I only use fundamentals when it comes to investments. When I'm talking like when you're holding positions, as opposed to when you're just trying to get in and out of the market. Yeah, don't really trade FOMC. Like, not really trading big news events, because usually the big news events are like, if price is at an area of interest on a big news event, it's likely that that area of interest is getting sacrificed at a level of liquidity, which is pretty likely. So not that heavy. How many pairs do you trade? I see 6 pairs on your watch list. GJ is there twice. GU is there twice because I create a lot of content for the community and like for YouTube and whatnot. So GU is there twice, one for my analysis, one for content. But if we remove that, then you're left with 5. USD IDR, I don't trade. I just have that there because I live in the country where IDR is the main currency. So yeah, I don't trade that. AU, again, I have that there because I have ties to Australia and involvement in the Australian currency. So I have that there for that purpose. And of course, I have some like very close friends that are also from Australia and have ties into the Australian currency that help out. People that like manage a lot of capital, but don't really know a lot about like currency markets or markets in general, but they have a lot of money, and that's valuable information to them. So then you're left with gold, GU, and EU, the 3 pairs that I actually trade. So to answer your question, 3 pairs. Gold, GU, EU, but usually mainly just focusing on 2 of the 3 because GU is moving crazy right now. Gold dropping. Yep. Yeah, Lewis, the myth, the legend, my guy. In other words, as long as the banks are trying to make money off retail, there will always be sweeps of liquidity. No, this is the big misconception that people actually have about smart money. They think that the banks are trying to make money off retail. That's not what actually happens. The banks do not care about our small money change. To the money that we have in the markets and the money that like us as retail traders have in the markets are like so ridiculously low. I think every single retail trader as a sole trader makes up around 3% of the volume, which is absolutely nothing. I mean, it's still something, but it's also nothing. So yes, that's what it was. They have a 97%. Because then probably another 10% is like small institutions and banks, and then you've got the big player, which we call, the master of the matrix itself. So yeah, banks don't want to make money from retail. They don't sweep liquidity to make money or to stop loss retail. They sweep liquidity to free positions so that they can take it to fulfill their objective easier. Big difference. Because if they've got people going against their idea, they have to put more money in the market to make it happen. And if they don't want to put more money in the market to make it happen, then they will first take out all of the opposition so that they can go there quicker. Think about it. If you're in a battle and you have to go from point A to point B, but there are people in the way of point B, better to just wipe them all out so you can get to point B real quicker, right? That's how it is. So the reality of it is there will always be, as long as banks are trying to, there'll always be this style of trading, or trading in general, as long as the banks have money, right? As long as money is a thing. So for as long as money is a thing, because don't forget, we didn't always have money, right? Like, study history, we didn't always have money. We had gold coins. We never had electric money. We had gold coins, and then just physical gold, and then then it was just literally commodities like food or clothes or labor. They were the only things that were actively traded, like, throughout history. Money is new, relatively new, at least anyway. Like, paper money is new if you look at actual history. So as long as there's like electronic money, which there always will be now, I mean, who knows, right? In 500 years, 200 years, 100 years, long before, after we're all gone, likely, there'll be people, maybe ourselves that reincarnate, that look back on this time in history and are like, wow, look, like, back in those days they had paper money, or they had electric money. Maybe they have some mad new stuff, or maybe they don't have money at all, right? Because even the idea of money at all is pretty crazy. The fact that we have to use this piece of paper to be able to have a level of peace and prosperity in our reality, so that everyone has enough food and everyone can get what they want. It's not true abundance. True abundance is like infinite resources. When we really have AI, robots, to do all of our work, I think robots and AI can really bring a lot of peace and prosperity to Earth. But I'm also worried, of course, of the negative repercussions that AI can have also. So, hyperextended to kind of answer, you're safe. Don't worry. Hence, retail versus institutional creating a market. No, it's not institutional versus retail. It's just the price. It's the buyers and the sellers. The banks do this stuff for objectives of, whatever their objectives are. Let's say in 3 weeks, there is a huge deal that's going to be taking place between Dubai and America for some oil. Well, because the Federal Reserve are basically the matrix who control the market. So because the market is the market, the people who are in control of the market, who are in the algorithm will have an objective. It's so carefully thought out and planned, like way ahead in advance. The people that actually own the world are already like 100, 200, 300 years ahead in terms of their plans. And so really the price does what it does for objectives that we have no idea what they are. Not because they want to take money off retail traders. They don't care about small money, because they literally print infinite amounts of it. Like, yeah, more money than we can even comprehend. They have infinite money. It's just ones and zeros in a computer screen. It's a matrix. It's literally a hologram that you're living in. It's a video game. We're literally just characters in a video game. Like, can you imagine right now you're sitting at home right now playing Pro Clubs, which is a FIFA game, or you're playing Call of Duty, and your character has a consciousness and he thinks he's at war. Right? Like, that's what it's like. Any questions? I'm going to wrap up soon because there's obviously no trades. I'm not here to force anything. I kind of knew there wouldn't be any trades because of where gold was. But any questions, please do drop them in. More than happy to reply. Do you think gold completes the entire move down? Right now, yes. Right now, all of the signs indicate that it would, yeah. You're welcome, brother. You are absolutely welcome. US markets are dumping for the time being. Well, yeah, literally. Literally. The whole of America as a whole is crumbling. If any of you guys know Ray Dalio, he released a new book. I can't remember when he released it, but it's called The Changing World Order. And he basically explains how America are losing all of their power, basically. And the only thing that they have to save them is the printing power of the money, which is the Federal Reserve. But the more they print, the deeper they dig themselves a grave. That they can't do it forever. So at some point, they will lose power, and China will take over, which is very inconvenient because if you believe in the idea that there's a globalist agenda, like a group of people that own every single nation, they own all of it. If you look at China and the system that China run, China have a system called the Universal Basic Income, and they have a social credit system, right? And they're still actively implementing these in. And basically what those systems are is ultimate control of their people, right? So they control everything about their people, all the surveillance, all the control of what they do, what they get, what they can have, what's taken away from them. That's essentially the world that they want us to live in. If you literally go and look at China right now, go and watch a documentary on what China is like right now, the social credit system, the universal basic income, that's what they want to do everywhere in the world, especially America. So they have to crumble. They have to build one nation first. They've already built China. They've built out the systems. They've implemented the systems. They're rolling with the systems. Now they crash the other nation, i.e. America, and take the world control over to China so that China can input their system onto the world, which is really just a system designed by the people that own all of the different countries, but have just created a game to look like that in America against China, when really they're both the same people. Seeing beyond the matrix. So yeah, that's why America's crashing hard. I'm not taking this, by the way, so don't you guys be getting any ideas. It doesn't completely fit my plan. The reason I just have it out there is I am interested to see how it reacts, because we are coming from an overall buy to sell level. I mean, if I go to a daily, you can see we're coming from a daily supply. I just want to see how this 15 reacts. It's already had the change of character. There's a decent level of impulse from it. So I'm just looking at how it reacts to it, just for fun. But I'm not actively taking this on my account because it doesn't actually meet the entire strategy. It meets parts of it, but not exactly. I would need price to come into this region and do this here, which is the 4 hour. You see how I knew that was the 4 hour? Fractals. Yeah, if you look at gold right now, what does this look like to almost every retail trader? Liquidity, right? Resist support. So this whole area in here, this here is very liquid. So the algorithm is designed to gravitate towards the orders, just to collect the orders. So it's collecting orders from here and then going to collect orders where they are next, which is down here. It's my opinion. Do you think there will be currencies in 10 years? Absolutely, of course. %100%. Cryptocurrency is brand new. Yeah, I think everything will be on the crypto system in 10 years. Everything. Any questions from my guys over at Prosperity Academy in our chat? Any questions, boys? What's the name of the book that tells about smart money concepts? The book is called The Market Makers Matrix. The Market Makers Matrix. Any other questions, guys, before I kind of end the session? Been going 2.5 hours. It's not bad. Not bad, not bad. If any of you guys, again, want to find me after this session, you can find me on YouTube. You can find me on our YouTube channel where we post new content all the time. We have over 50 videos. We're the fastest growing smart money trading community out there. If you want to find us as a company, as a trader on YouTube, all the content created by me, you can go and check there. If you want to find me personally, you can find me on Instagram at LewisKelly55. There's not much content on my Instagram. However, with that being said, I've just hired a whole team of media operators. I've hired a whole team of videographers, video editors, graphic designers, like a whole team, a whole media team to basically help me bring tons of content, personal brand content, trading psychology, trading mindset, prosperity consciousness, the laws of reality, how to create your own reality. Like all of these topics, I'm going to be sharing them all, and they'll all be going to places like my personal YouTube when it's launched, and you'll be able to find all of that information on lewiskelly.55 on Instagram. So if you want to stay in touch with me as a person, then definitely do go and check me out over there on Instagram and shoot me a DM. Let me know that you was on the Trading Nut live session so I know who you are. So if you have any future questions, I will more than likely respond to you guys. On that note, guys, I'm going to bring this live session to an end. I want to thank everybody who was in here for the entire duration of the time. I hope you guys found massive value out of the live session. Again, everything I do, I try to do with as much value as possible. So I thank you guys for joining the live session, and I hope to see a lot of you guys over on different media outlets if you guys want to follow my journey. So thank you guys for being here. And hopefully I'll speak to a lot of you guys soon. Ciao.